Coming up on Market to Market, assessing the risks of a possible spread of avian flu to humans, solving the problem of safety when entering the bin, and commodity market analysis with Don Rose. Next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Federal Reserve Chair Jerome Powell said this week he was trying to recession-proof the economy, even as the labor market remains strong. For the first time in 4 years, the Federal Reserve lowered the key interest rate. The move Wednesday was by 50 basis points. Consumers are still spending their earnings as retail sales figures added 0.1%. Online retailers, sporting goods stores, and garden stores reported higher sales. When autos are stripped out, the rate moved higher by the same amount. Buying a home remains difficult due to higher interest rates. Existing home sales fell 2.5% in August and 4.2% when compared to a year ago. The lower interest rate, coupled with increasing inventory, is making for some optimism in that sector. The Rural Main Street Index hit its 13th consecutive month below growth neutral. Bank CEOs in rural areas say weak agricultural commodity prices and sinking equipment sales are leading the downward trend across the 10-state region surveyed. And much of that survey area has been impacted by bird flu, both in poultry and dairy cows. Research on a vaccine is in the works, and USDA recently approved a field trial for cattle. As livestock owners keep an eye out for the spread of the disease, so do scientists watching for the leap to humans. Peter Tubbs reports.
The ongoing spread of bird flu across the nation's poultry and dairy herds poses a concern beyond those species. The jump from birds to dairy cattle shows the virus can mutate in ways that increases its spread to new species.
30 to 50 mammalian species have been infected now with this bird flu, when historically it has been primarily only in birds. And then what really elevated its concern in the last 6 months is it was detected in dairy cattle in the panhandle of Texas.
Bird flu has been detected in dairy cattle in 14 states, affecting over 200 herds. There have been 15 confirmed cases in humans. All but one of the human cases had direct contact with infected dairy herds. The crossing of H5N1 to mammals is concerning to virologists, as the potential for the virus becoming endemic in both poultry and dairy has increased. A stable version of the virus could pass back to wild birds, increasing the spread to unaffected animals.
In this current situation with H5N1 bird flu that's now in dairy cattle, we have to make sure that our public health authorities, our animal health authorities, and our industry, dairy industry, are working very close together at all levels from the national, state, local level, and we have to work with our international partners too.
For Market to Market, I'm Peter Tubbs.
Saturday marks the end of National Farm Safety and Health Week. The U.S. Bureau of Labor Statistics reported 417 fatalities in the agriculture sector in 2022, keeping the industry at the top of the most dangerous work environments. Equipment usage, transport, and confined spaces all create safety challenges. Since 2007, there have been 504 entrapments in grain bins, according to an insurance industry report. But not everyone has to enter the bin, and a new invention aimed at reducing that risk is geared towards saving lives. Josh Bittner has our cover story.
Bin rescue is very dangerous. Low frequency, high risk is what we call it. You can't just have them come in from the door, because what does that do? The grain comes down on them, right? So if you've got a bad situation and then you just make it worse with this cascading grain.
York, Nebraska Fire Chief Tony Bestwick's crew have struggled with rescuing farm workers trapped in grain bins.
It's a very stressful situation.
Bestwick cautions that time is key. Experts say an adult can be submerged in a bin filled with corn or soybeans in as little as 20 seconds, a tragedy all too common in rural America.
Someone in their family or a neighbor or somebody they know, I think just about every farmer that is around grain bins has a story of someone they know that's lost their life in a grain bin.
Safety is top of mind for fifth-generation Nebraska row crop producer Zach Honeycutt. Just a child when his grandfather's brother died in a grain bin accident. Today, he follows proper established protocols to move harvested raw commodities out of storage for buyers. But risky situations can persist, and one trip to town saw Honeycutt instigate a homegrown tech startup whose mission became no boots in the grain.
We were building a robot, and we were showing that to people at church, and showed that to a family friend of ours who farms, and he said, if you can build that robot, you should build me a robot to keep me and my kids out of the grain bin.
Ben Johnson and his father Chad had never set foot in a grain bin before they invented the Grain Weevil, an autonomous robot that cruises through grain loads on a pair of mini augers, busting up clumps in surface crusting to maintain profitable product. They say their machine also minimizes lung complications and combustion issues associated with concentrated grain dust.
I like to tell people it's like every dad's dream to build robots with their kid. And people look at me kind of funny. I said, okay, every nerd dad's dream.
With a love of robotics fostered by his educator father, Ben earned a degree in electrical engineering from the University of Nebraska, Omaha. Their business went from father and son building prototypes at home in small-town Aurora to a shop in the state's largest metro area, over 10 employees, 2 issued patents, and several more in the works. Private capital and federal grant money are helping Grain Weevil iron out technical hurdles and finalize their manufacturing process, which they claim will unleash a monetized ecosystem of insurance, finance, farmers, and ancillary businesses. They've targeted the second quarter of 2025 for a full product rollout.
It started in the shed, just putting it together with whatever we had, and then now you can see we've really grown the team and been able to engineer this thing to be powerful and capable inside the bin.
Grain Weevil assures just one of their robots alone can manage up to 250,000 bushels. This fall, they'll unveil Bin Assist with partners across the Midwest trained to run a fleet of 30 robots and provide specialized services to local areas.
Take 1 bushel of grain and follow that along the supply chain. We can actually capitalize on that 1 bushel of grain on the farm, at the co-ops, in the transportation, at the food processing facilities, all have use cases for the robot.
For Honeycutt, whose grain bins were proving ground for the Grain Weevil, it's an idea that's come home to roost.
It's just been cool to see that evolution. We've created a lot of technological solutions in other places on the farm to protect us from unnecessary risks, and this is one of the final frontiers.
We try to find the most current research on keeping the grain in good quality at conferences like this, whether it's through just management techniques or if we can remove the human from hazardous situations. Using a robot to do that would be a great example.
University of Nebraska Medical Center Associate Professor Dr. Aaron Yoder performs grain bin safety outreach on behalf of his institution's Central States Center for Agricultural Safety and Health.
Oftentimes people will go inside the bin to either check the quality of the grain or to do something if it goes out of condition. It gets lumpy, it gets moldy, they'll go inside to try to break up some of those blockages that might prevent the grain from flowing. And when I see things like that, I get tremendously sad because we know it could be preventable.
Grain Weevil sought Yoder's expertise on safety compliance, along with Nationwide Insurance, the country's largest agricultural insurer.
It feels like I'm infinite. I can't move my legs at all.
Nationwide conducts an annual Grain Bin Safety Week and has donated manufactured rescue tubes to various rural fire departments, including York, Nebraska. First responders are grateful for specialized additions to their toolbox, but as grim headlines of grain bin catastrophes continue to trickle out of Husker country, the sense of urgency is palpable.
We've got to hurry. We've got to do this as fast as we possibly can. But we can't. We have to do it right. It takes a lot to develop a machine this complicated. So it really does motivate us, though. It keeps us pushing, it keeps us moving forward, because we know every 2 weeks that we don't get one done, somebody's losing a father or a son or a mother that's in there helping. It's tough.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Range-bound trade continued as early harvest returns added little doubt to the predicted bounty ahead. For the week, the nearby wheat contract lost 26 cents, and the December corn contract shed 12 cents. China again returned as buyers as export sales helped the soybean complex. The November soybean contract added 6 cents, while October meal weakened $1 per ton. December cotton expanded $3.74 per hundredweight. Over in the dairy parlor, October Class 3 milk futures sold off 9 cents. The livestock market was higher. October cattle expanded $4.83. October feeders put on $4.77. And the October lean hog contract improved by $3.78. In the currency markets, the U.S. dollar index fell 28 ticks. October crude oil found $3.20 per barrel. COMEX gold added $32.10 per ounce, and the Goldman Sachs commodity index increased 10 points to settle at 532 even. Joining us now is one of our regular market analysts, Don Rose. Hey, Don.
Great to be back, Paul. Thank you.
We're not sweating at the Iowa State Fair today. We're in climate controlled here. Still hot, though, for this time of year. Is this weather having any impact on maybe spring or winter wheat plantings or anything of that nature in this country?
Well, I think you hit two of the issues from the weather standpoint, and I always think 80% of the market is weather. But, for the most part, we'll see how the yields come out, but it's not the finish that you want from a producer standpoint, hot and dry. And then down in the hard red winter wheat area for the wheat, plantings there in dry dirt. Same thing in the Black Sea on wheat. So you've got two areas we're watching pretty close. And we're watching the weather here, the finish to the crop, and also watching the weather in South America.
You've got a geopolitical issue, though, because Russia's having a bigger crop. Ukraine is not. Ukraine's in that drought area. What's that going to do to some of the world dynamics? Is that a little more instability coming to wheat?
Well, estimates on the corn is about maybe Ukraine has a 50% corn crop. And, really our competition on corn exports really comes down to Ukraine and Brazil. But, the wheat in, talk about the wheat, Russia just continues to keep a thumb on the price. They keep selling the wheat market, down, clearing wheat, I guess, is to pay for the war. But, that's the real issue with the wheat market.
With wheat having this receding this week, is this an opportunity that you need to take advantage of for some sales?
Well, I think when you look in the big picture of things, I think you have to say, at harvest time isn't the best time to be trying to press and sell stocks. Seasonally, the wheat market, the oats market bottoms the first couple of weeks of September, and it looks like, that's what's going on at the present time. So, we had a pullback this week. Let's see if it finds support here. The technicals certainly were weak on Friday across the board,
We have a question that came in from a viewer, and I'm going to set it up this way. We always talk about government reports, USDA reports, but it's really the Fed that had an impact on agriculture and inflation. Here's what the question is. Jacob in Minnesota wants to know, Don, why haven't commodity prices changed with inflation? It always hits everything else in ag.
Well, the big thing that happened, if you look at the whole policy, it was the interest rates. When they started raising interest rates in 2022, that's when the dollar moved higher. That's when our exports slowed, and that's when the funds sold the market and pressed it, basically for the last 2 years, 2.5 years. So, I think when you look at it from an optimistic standpoint, just reverse it. Interest rates are going lower. Funds are gradually getting out of their short position. The dollar's trying to go lower, and so the exports and the demand should pick up, Paul. So the interest rate cycle is changing, and maybe that's a good thing for the grain market buyers.
So we had really good S&P, the Dow Jones, the NASDAQ all performed well initially in those first 36 hours after the Fed news. What about the outside money then influence? It sounds like they're not selling off in that sector yet to come into commodities.
Well, I think the real problem is, the confidence when the last month the budget deficit was $380 billion. So there's just too much government spending so far, Paul. So people are looking at alternatives to, from an inflation standpoint, a dollar standpoint. And so you're right. I mean, the Fed cutting 0.5% really kind of stoked the fire again. So we'll see. But in the futures market, you have another 0.5% dialed in, because you can trade the futures market on interest rates, another 0.5% dialed into the end of the year, and from now until March, a full another percent. So it's a dicey situation going forward.
Those are big steps. Let's talk corn for a minute. Combine's starting to roll. Harvest pressure is here. The easy question is, are we low? But what does this early returns in harvest mean to the market?
Well, I think the big thing is we had our harvest probably already with old crop stocks moving pretty aggressively. Producer doesn't want to sell corn or soybeans at these prices. The national average on corn, $374. Producer isn't interested in selling here at these levels. $950 on soybeans. So I think it's just maybe our seasonal lows are in at these prices, Paul.
That December corn just hung on to that $4, and it was kind of in that $4 to $4.15 range for really most of the last 2 to 3 weeks. On that deferred contract, if we look out on the road here, a little better opportunity ahead?
Well, we're down to these little numbers and these pennies now in this market on merchandising, Paul. It's not the big dollars that we were talking before. But from December to July corn, the producers' choices on marketing are probably trying to get the carry in the market, the basis and improvement. You have a 36-cent carry from December corn to July, 7 months out, and 8 months out, a 57-cent carry in soybeans. So I think the producer's going to do the best job he can to use his storage and try and get a better rate of return.
You bullish long-term corn, though?
I think you have to say what's fair market value on the market. And I think what we've really learned lately is, it's a typical seasonal market. Put your high in the spring, lows in the fall. And it appears that around $4 on corn, give or take 10 or 20 cents, is fair market value, and the same on soybeans. So when you look at the demand side of the market, probably continues to improve, Paul, with all these biofuels. So long term, I think you have to be bullish on agriculture, be bullish on the grains.
Soybeans, a little bit of help on that demand picture comes from China this week, showing back up in the market, and it's actually showing up in a couple of other figures. But we're still stuck in a range.
We're stuck in a range because it's harvest time, and we haven't really sorted out whether the producer's going to be an aggressive seller or not. But, you're right. The support underneath the market, China buying, and we're in extreme drought in the northern, central and northern Brazil, some of the driest areas in there in 40 years. So it's something that needs to improve, and I think when South America raises twice as many soybeans as we do in the U.S., the weather is going to be the focal point going forward.
I don't mean to be so prickly with you tonight, but it's normally dry this time of year in Brazil. Why is this any different?
Well, you're exactly right. I mean, because usually what you're alluding to is the monsoons usually come at us the first couple of weeks of October. They wait for the rains, then they start planting, so nothing yet. I think the other thing is maybe that does, maybe that doesn't happen, but it's also a La Nina year, and the La Nina is gaining strength, and that means you flip around. That north goes normal, and southern Brazil and Argentina go into a dry, droughty pattern. So I think it's the fact that there's a lot of unknowns in the weather yet, Paul.
You said you were bullish on agriculture in general. Does soybeans get to be included in your long-term view of how you see soybeans?
Well, look at the soybean market. It's not only us, it's around the world. It's the biodiesel. We've got 3 new plants coming on in the fourth quarter crushing soybeans. Big demand there. You've got countries like Indonesia on their palm oil. They're looking to maybe use 50% of their gasoline infused with, or diesel with biodiesel. So, you know, I think it's the energy, and that's the big one on corn. Look at corn. 40% of the corn roughly goes into ethanol.
Cotton, real quick. There was a storm last week, not this week. Is there something else at play besides weather here in the U.S. in that market?
Well, if you look at the cotton charts, I mean, we've had a big rounded bottom since midsummer on cotton. So much like the grains, we hit kind of a fair market value. Got some buying in because of the rain and the bowls, you know, that were open and some issues. And the question mark is China going to pick up the demand as their economy continues to improve, we think.
Live cattle appeared to be through with their pause as they marched higher. Is that going to continue?
Well, the cattle market rallied. You're right. The futures rallied $8 to $10. You know, the big issue with the cattle market is the weights. The weights are sitting right at all-time records. You know, cheap grain, cheap prices. So I think the bigger weights kind of an anchor here. But the government says 191 for a cash price for all of next year. If you believe that, too low out in the distant months on cattle, Paul.
Cattle on Feed came out just before we rolled today. What was in that report?
Well, we went into it with a big rally on the cattle like we just talked about, but the total cattle on feed slightly higher than the trade thought, up maybe 0.5%. Placements, you know, bigger than they thought, and the marketing's a little bit lower. I always say those numbers on surface are a little bit negative, but a lot of it was probably dialed in, and I think it's just the big pump that we got on the cash at the end of the week here that gave us the strength.
The cash trade, not the cash from the government. Sorry,
right.
I just want to make sure. It's like we've been talking a lot of those things. Do you? I guess I'll stick with the theme of the night: optimism for cattle. I mean, we've been at really good levels here for cattle and for feeders. I ask this all the time. This can't keep going, can it?
Well, the numbers aren't there. I mean, the placement numbers are close to a 5-year low. You know, the government next year has the total production down 4.5%, hogs up 1.6%. But, you know, you're right. The issue with all these meat markets is cheaper grains mean cheaper livestock, just because, like we said, you put more weights on. You go to work and have imports from Canada, from Mexico. You know, you bring more meat in from Uruguay. So you plug some of these areas, you know, some of our tight numbers with world supplies.
Hog market reversed and moves higher this week. There's been this story of exports. Is that what you think the story is?
Well, I think if you look at it, I mean, China was the one that really started putting some real pressure on our hog market. And, you know what, China's hogs are up over 40% this year, so that's a big plus. It tells us our industry. But the futures market has pushed up here, kind of at some tough levels. You know, seasonals are still positive on cattle and hogs, but, you know, I think when you look at the hog market overall, it probably is going to be one that, you know, summer months look like, you know, we've got some decent prices here. It's the weights are the issue there again, Paul. I mean, the weights account for about another 100,000 head of hogs a week, you know, 20,000 head on cattle. So it's the weights that are putting more tonnage in this meat market.
You've been talking to my doctor again about the weights? Let's look at crude for a moment and the dollar. Crude puts on $3 this week, plus the dollar weakens. It's an election campaign. I mean, we got a lot of stuff on the outside markets influencing the commodities. What's the one thing the producer should be looking at the most right now on some of those outside things?
Well, I think probably the biggest thing for the producer is what's going to happen with the U.S. dollar and what's going to happen with interest rates. Is the government really going to continue this interest rate cycle that is much lower? Like we said, interest rates out into March are already dialed in, you know, a 3.25% interest rate, 3.5%. Versus where we were 5.25%, 5.5% before this cut. So interest rate's a big factor for the producer, and then the dollar from a demand standpoint. As we watch inflation, we know inflation's just killed everybody.
It has, and continues to be. I guess pin down in 10 seconds, which one of those do you think is the biggest story we need to watch?
I think the biggest story is probably the interest rates, because that's the thing that can affect the bottom line the most short term.
All right, Don Rose, good to see you again. Thank you.
Thank you, Paul.
All right, that's Don Rose, everyone, next week. Or first, we're going to pause the analysis, continue our discussion on these markets in our Market Plus. You can find both analysis and plus on our website of markettomarket.org. As Harvest 24 gets going, be sure to tag us in any of your images on Instagram. You can also see what we are posting at Market to Market Show. Next week, we'll look at the shrinking options for healthcare in rural America. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.